Hey internet pals, welcome back to the channel. Ike here, and on Live Richly, we'll help each other become better investors. So I've been investing personally for about the past decade or so now, and my whole investing process and my returns actually kind of started to improve after I found an investing style that works for me, what suits my personality. So that's what we're going to be covering today, investing styles. I'm going to profile two of the more popular investing styles out there and highlight the one that I personally use, and hopefully you guys can learn something from that. Okay, let's get into it. So there are a ton of different investing styles out there, but if you're a new investor, there's a high likelihood that you started off as a value investor. And I got really deep into value investing for about the first 3 or 4 years of my whole investing journey. I read the little book on value investing. This was an awesome book for those days when we used to commute to work. Awesome book to read on the train. Small, portable. Then I also read The Essays of Warren Buffett, Lessons of Corporate America, another book on value investing by Warren Buffett. And finally, these took me ages to read, the Warren Buffett letters, Berkshire Hathaway letters from 65 to 2012. You can pretty much get these online for free. I don't even know why I bought this book, but a lot of valuable lessons in here. Like, I got really into value investing. So why value investing? Simple. I wanted to be Warren Buffett. He's very good at breaking down complex financial principles or concepts and making you think that you can do it as well. And he's written a ton of material, tons of books have been written about him. So if you're starting off to invest, and he used to be one of the richest people in the world, value investing is usually a good starting off point when you get into investing. So you're probably asking yourself, what is value investing? Value investing was started by Benjamin Graham, who was Warren Buffett's teacher. And if you want to know more about value investing, I highly recommend picking up a copy of Security Analysis by Ben Graham. It's a must read if you're serious about investing. But in my opinion, there are only 2 chapters that you need to remember in that book. That's chapter 8 on Mr. Market and chapter 20 on Margin of Safety. Just those 2 chapters will make you a significantly better investor. Trust me. The best way to think about value investing is you're looking to buy companies when they are on sale. You're looking to buy $1 for 50 cents or lower, right? The other popular investing style that has been killing it, especially since the global financial crisis, has been growth investing. Look at how tech companies have been going up like crazy over the past decade. And the most famous growth investor would be Peter Lynch. He managed the Fidelity Magellan Fund, which he took from 20 million, I think, to about $14 billion by the time he stepped down. So growth investors, instead of focusing on the numbers today or on the growth, they focus on the growth strategy of the businesses that have the greatest potential. I mean, look at how Amazon and Tesla, 2 companies with billions of dollars, but they've only recently started to earn a profit, and they were unprofitable for decades, right? The early investors in these companies would have endured years of losses, but they focused on how these companies would dominate in the future, given more time. So as a growth investor, you're looking in the future. You're not looking at what the company currently is, you're looking at what this company could be. But with value investing, you're looking at what the company is now, and you're making a determination or a judgment that this company is worth more today. So these are probably the 2 most popular investing styles. You also have quality investing, momentum investing, just to name a few. I have in the past had investments that fit in all these styles, but my investment returns, as I've mentioned before, and my whole investing process started to click or work better for me after I stumbled upon thematic investing. So what is thematic investing? Thematic investing is an approach which focuses on predicted long-term trends rather than specific companies or sectors, right? So with thematic investing, you know that there are established themes that are going to take place. An example of themes or mega trends, as they like to put in their marketing material, would be something like climate change and resource scarcity, the emergence of the middle class in China, global urbanization, demographic and social change, clean energy and the decline of fossil fuels. There are too many themes to mention, but you get the idea. All you are looking to do is ride that wave of that trend that is already happening or that is predicted to happen. So why thematic investing? Why does that work for me? Well, it's simple. It's probably the type of investing that makes most sense to me and makes me the most money in a way. So it is the easiest way to invest because it doesn't require you to look at specific companies, go through financials, read prospectuses. I know for a fact that cybersecurity is going to be a space to watch as the world becomes more and more connected, and our reliance on the internet and the Internet of Things and just staying online is super important. So delivering security at a reasonable price and at scale is going to be a game changer in the digital age. But the thing I don't know is which cybersecurity company, cybersecurity product is going to win. I don't have the skills to value these companies as you would do if you're a value investor. But I also don't have the conviction to pick and hold specific companies as you need to do if you are a growth investor. And knowing me, I would probably sell at the worst possible time. So what I can do is buy a whole bunch of these companies involved in this space through an exchange traded fund or an ETF. I can get exposure to all things cybersecurity and ride that wave. So if you don't know what an ETF is, I haven't explained that video. I'll link it in the description or I'll annotate it on the screen here. So another benefit of thematic investing is that timing the market in regards to when you buy and sell is less crucial as these themes can last for decades and you're invested for the long term. So if you're someone who likes to have their investments on autopilot, there are a lot of passive investing funds that just track an index for any theme that you can think of. So the most important thing to realize is that you need to find an investing style that works for you. I tried them all, and thematic investing is the one that works best for me. Sometimes I'll pick an ETF or I'll buy a specific share or invest in a managed fund as long as that investment fits in the theme that I've identified and I'm trying to take advantage of. I think thematic investing just makes way too much sense not to use it. But at the same time, Warren Buffett has amassed a fortune being a value investor. Peter Lynch's returns were crazy, probably the best money manager of all time. And they used two totally different investing styles. You just have to find what works well for you and what gives you that confidence to believe that you are able to beat the market. In my case, it was thematic investing. I'll link some articles on thematic investing in the description below. I hope this helps you guys become better investors. And until next week, take care of yourselves, take care of each other. Don't forget to call your moms. And it's been real. Catch you all next week. All right, bye.